We have another guest who joins in. Ambareesh Baliga of Edelweiss is with us. The market is still down 2%, by the way, so still below that 5400 level. Ambareesh, levels are getting slashed like it's nobody's business. I mean, 1100 points gone on the Sensex in 2 days. When we were doing the weekend show, I don't think any of us anticipated such a big fall last week, that is. What would you do in a market like this? Would you just back off and wait for all this dust to settle?
I was not bullish on the market. In fact, I was telling people that they should conserve cash and just hold on for the time being, just stay out. But I also did not expect this sort of a fall today. And after the sort of a fall which we have witnessed today, yes, I think it's very much possible that we could see a small bounce back. But the question is that bounce back will be only a bounce back, and we could again resume the downward journey over the next couple of days. Because the way things are, I think people are very skeptic at this point of time. There's a lot of fear on the street. So I really don't see much of an upside for the market. And as of now, clearly that 5200 to 5500 window has opened.
All right, Ambareesh, stay on. We need to slip into a very short break on that note, but let's get you one more voice. We spoke to Bharat Iyer of JP Morgan earlier in the day, and he pointed out that valuations do not have much meaning in the current market, and one should be wary of using historical multiples. Let's listen in.
For the last 3 or 4 months, the markets have been facing headwinds, both from a global macro and from the local macro. As far as the global macro is concerned, the easy money seems to be coming to an end. And as far as the local macro is concerned, growth is way below trend and policymakers have very little stimuli. The currency markets perhaps been more consistent in factoring in these risks over the last 3 or 4 months. The equity market has been living in denial, and finally it's catching up now. There's no relief for them until the rupee starts behaving itself.
What do you do, or what are you recommending with the crowded trades now, Bharat? Because that list is getting smaller. It was probably 35% of the market, now 20% of the market is pretty much IT and pharmaceuticals. Are you still asking them to stay there, or is it getting too crowded a trade?
From a portfolio allocation point, it's perhaps getting to be a crowded trade, but I guess over the near term there is no other option. If you have 12 to 18 months, you have that kind of time frame, then it's perhaps a very nice time to go bottom fishing in the domestic sectors, particularly in areas like financials. But if you don't have that kind of time frame and you're answerable on a daily basis in terms of NAV, I guess there's no point to change asset allocation on a sectoral basis at this point in time. We've been for nearly 6 months now recommending a very defensive posture, and been recommending that investors stay with IT services, healthcare, the sin stocks and energy. And we are asking our investors to stay there until they see signs of the rupee stabilizing.
We haven't seen much by way of capitulation yet. Given our macro, the way the currency has moved, one may have expected to see far more FIs selling. Do you suspect that may actually unfold in the second half of the year, or will people just sit on their hands and ride out this rough phase?
I guess there is a lot of frustration building up because, as I mentioned to you earlier, investors are meaningfully overweight India, and if this underperformance continues, everyone wants to bury the evidence, and that pressure will start mounting on them, which is the reason I think the next couple of months are going to be very important and very challenging. If this state of affairs continues, then don't be surprised to see capitulation there as well.
What about the big end investors to many of these funds? Do you think many of these fund managers who are still sticking with India might be increasingly under pressure if they are faced with questions from their larger investors on why they are sticking to underperforming markets like India?
I guess that pressure will start mounting, particularly if this phase continues, because they've been meaningfully overweight India and they meaningfully underweight some of the other emerging markets which have been performing very well. Which is the reason I think the next couple of months is very important, because there's only so much pushback you can give your investors given the kind of underperformance they are facing. So as far as they are concerned, things should bottom out quickly. If that does not happen, yes, the question you raised is very, very relevant. But I guess from a global investor point of view also, you really have to distinguish between cyclical pressures and structural pressures. The problem most emerging market investors are facing at this point in time is, while India may look bad cyclically, structurally it looks a lot better than some of the other markets which compete with India for allocation. So you have a Brazil or a China which perhaps is cyclically looking better, but they have their own structural issues, and that's where I guess emerging market portfolio managers are having a tough time balancing between the structural and the cyclical at this point in time.
What have you done to earnings expectations, Bharat? Because in January, a lot of people were talking about 14-15% earnings growth. I just heard someone this morning talking about 7% earnings growth. How much have you brought it down?
We are in the 7% camp, Udayan, and we've been there for the last couple of months. But I guess even that's looking at risk at this point in time, because let's face it, financials are 30% of the benchmark, and given where 10-year bond yield is right now, unless policymakers give banks some accommodation in terms of how they want to price these assets, the second quarter earnings season could be quite a disaster for the financials, and that could very quickly flow into the other domestic sectors as such. So right now I think a 6 to 8% earnings growth is more consistent with a 5% GDP growth, but if the current mayhem in the bond markets continues, I think there is substantial downside to current estimates.
Hi, welcome back. We have about 20 more minutes of trade to go. There's a 40-point pullback that we've seen from the lows of trade. So from 53.60, we're back to 5400. Courtesy a couple of these stocks like DLF, etc. But nothing substantial to write home about. It will still be quite a debilitating day. Anuj is also here with us. Anuj, anything incremental that you spotted, or is it still very, very downbeat?
Yeah, I mean, it could have been a lot worse, Sonia, as you said. So, you pointed out DLF, but the stock that I want to point out now is HDFC. If you see the intraday chart of HDFC, for example, there's some semblance of buying which has come in for HDFC. If you see, the intraday low today was 712. It's now at 736. So 24 rupees recovery is quite significant that you have seen. I think the other example is Sun Pharma and Lupin, which were down 6% when we were doing markets in macro, and both of them are now down 3.5% or so. So to be fair, there is a bit of a recovery that you have seen in some of these names. Again, just clutching to straws here, right? I mean, they're still down 1,000 points in 2 days, but could have been a lot worse.
Okay, let's see. We still have about 20 more minutes of trade to go. Our guests are still with us, so let's get a couple of questions out of them. Ambareesh, the financial sector has been one where we've witnessed a perceptible corrosion in results as well as in the stock prices. But is there any bottom fishing that you would do right now, or would you just stay away from the banking sector because of these MTM losses, the way bond deals are going, etc.?
No, in fact, we've been advising our clients to stay away from the banking sector because clearly you'll have the NPS going up, the way the economy is going, and at the same time you'll have huge M2M losses, and at the same time we don't see the credit growth really taking off, again looking at the way the economy is. So it doesn't really make sense looking at the banking sector at this moment, although we have seen a decent fall in the past few weeks, because the way we see it is we could still see a further cut of possibly about 5 to 8% more.
Mr. Tulsian, which stock would you buy now from a portfolio point of view over the next 6 to 12 months? Because we've seen quite a bit of price damage. Any 2 or 3 stocks that will be on top of your list? On Friday you told me that maybe Monday first half would be bad as well, but then things will bottom out. If that's the case, if you have to build a fresh portfolio, what stocks would you choose now?
See, Anuj, if you really take the situation, when you talk to the rural people, maybe in the interior parts of the country, we know that there has been a very good monsoon across the country and there is very good agricultural crop, and the people are so jubilant. I tell you, sometimes you feel that there is a Chinese wall between the city and the rurals. They are not disappointed or dejected in any way, by the maybe the weak rupee and all sort of things. So that is bound to see the huge spending by them. I'm not saying that consumer durables can be given a look. So at least the FMCG space, we have been taking a positive call. I heard, when the HUL moved to a level of 660, 670, many of the analysts have criticized that there was no point in tendering the share at 600. So what is preventing you to buy now at 580? Similar was the case with ITC. When it moved to 370, we were all started giving the brighter side of the story, consistent growth, all blah, blah, blah. And now it is available at a level of 320. So, probably these are the stocks, maybe the stocks like Imami. I'm purely focusing on the FMCG space, or even for that matter, you can take the consumption story. A while back, while discussing, with Sonia and Rima, I've said that, one can look for the stocks like maybe UB Group, United Spirits Limited, United Breweries Limited, because we keep getting the renewed kind of news flows coming in the stocks. Maybe UBL, Heineken wants to increase their stake. You suddenly see the stocks moving up. Maybe the stocks like Berger Paints, Asian Paints, so these are the stocks I will again start looking at. You have, reasonable amount of comfort on those stocks. They are now having corrected by about maybe 15 to 20%, and I would say maybe 30%. So please, look to buy these stocks, have a horizon of maybe 3 to 6 months if you have a shorter term horizon, and look for a return of maybe 10 to 12%. I don't think that on the downside you have much of the risk prevailing there, but on the upper side, you can look to make about 10 to 12% in next 3 to 6 months.
Ambareesh, just taking that point forward with you, the one stock that most people would run after in a market like this would be L&T, 737. But given the way the macros are shaping up, I guess that there are not too many takers. Would you buy L&T at sub 750?
I mean, again, a stock like L&T, we have been positive on this stock for a while, but like I've been saying, in a market like this, I think it's best to stay on cash because surely going ahead over the next few weeks, I suppose you'll get opportunities to buy at lower levels. So why NSE rush in right now? Because I mean, if you're a trader, yes, possibly buy for a bounce back, but if you're an investor, I think one should still wait a while longer.
All right, stay on guys. We'll just quickly get a check on some stocks. Our research team is standing by to tell us if there are any stocks that are moving and shaking around. We have Nigel followed by Pragya and then Ushan. Guys, over to you. Nigel, let's start off with you.
Yeah, Sonia, one of the stocks that has really been buzzing around has been Oberoi Realty. Now, this stock has been under pressure for the past couple of weeks, corrected nearly around 10% odd. The market seems to have really woken up to the fact that Oberoi Realty will have to go ahead and sell nearly around 3.5% stake to bring down its shareholding to around 75%. This is our CNBC TV18 exclusive that we did report a couple of days back. Importantly, October 2013 is the timeline that they do have. This OFS overhang seems to be really plaguing the stock, given that it's one of the best bets in the realty sector. It doesn't have any debt on its books and it's sitting on a good amount of cash as well. So this OFS overhang is really what's plaguing the stock. It's down nearly around 45% since the beginning of this year when it was trading at its 52-week high. So all in all, it's trading weak and it would continue to do so till in fact this OFS gets out of the way. That's it from me. Pragya, over to you.
Well, thanks very much for that, Nigel. The stock that I've picked today is Future Retail. It's really alarming to see the carnage on this particular stock. Now, if you see Wednesday's close levels of about 90 odd rupees, the stock is currently trading at 75 rupees. That's down about 18 odd percent. The stock was already languishing around its 52-week close on the 1st of August, around that 63 odd market. It did see a bit of a rally. As far as the results were concerned, which the company reported, the results were fairly steady. The overall same-store sales growth was expected to improve. Of course, the company has hyped off its pantaloon business. Some of the key fine prints as far as the results were concerned is that the operating margins continue to get battered around, down about 230 basis points on a consolidated basis. That was a fair point as far as the results were concerned. But importantly, going ahead, it's the whole leverage problem that the company is sitting at. That is a huge bit of a problem. Just to put things into perspective, the company has a consolidated debt of approximately 4,500 crores, upwards of that. They also have convertible debentures of over 750 odd crores. While they plan to repay almost 2,000 crores of debt, it still continues to remain high. For a company, I was just doing some calculation on the analysis bit, for a company which is generating a return on equity of just about 2% and sitting on a very, very high debt, that's a very alarming situation, which is probably why, despite reporting a decent set of results, as far as the company's core retail business is concerned, this was a very, very alarming financial performance. So Future Retail definitely getting a thumbs down in markets at least 2 days in a row. That's it from me. Over to Shang.
Well, thanks for that. I've picked up SR Oil. The stock has gained around 5% odd in today's trade, and this is the third session back-to-back wherein the stock has locked up in the upper circuit and gained around 15% in these three sessions. Again, the volume on the counter are pretty decent enough as of now, around 2.5 lakh shares on both the exchanges combined. Earlier, when the company came out with its numbers, the revenue saw a boost of around 12% odd and came in around at 24,700 crore on the upper side. Again, the losses of the company at this quarter around were much lesser as compared to the earlier quarter at around 863 crore odd. The net loss which was seen was mainly due to the fluctuation in the total foreign exchange, which was led by the rupee depreciation which was witnessed across the whole quarter. Additionally, the EBITDA numbers were also quite positive as compared to a loss which was seen in the earlier year. Finally, it was SR in case of SR Oil. Earlier, Morgan Stanley has came out with a report wherein they have put in an underperform on the stock and they have maintained a target of around 49 rupees per share. On that note, it's back to you.
All right, Ushan, Pragya and Nigel, thanks a lot for that. Well, before we take a break, just a word on the market. It looked like there was quite a bit of covering which was on, but all of a sudden there's again some fresh selling which has come in. So Nifty is now back towards 5400. Hasn't gone there yet, but at 5410 now. Let's take a break on that note. Once we come back, we'll have the last 15 minutes of trade. Welcome back. 5420 on the index at this point in time. The mid-cap index is still down 2%. We're still chatting with our experts. Sudarshan, would it make any difference if the Nifty has to close above 5400? I mean, is that of any significance, or do you think it's no point talking levels right now?
No, there's no point talking levels. I did say at 2:30 that I do not expect the Nifty to slide further, and I'm gratified to see that the Nifty as well behaved well. But no, these levels are unimportant. We are in a waterfall decline of some kind, and I explained that the markets will stop when it wants to. I don't think today is the day, but at least for the time being, the carnage has stopped.
So what would you do by the end of trade and as you head into tomorrow, Sudarshan? Firstly, would you have already closed your short positions, and secondly, would you resume the short bias as you head into trade tomorrow?
Sure, Sonia, when we discussed it, that was the time when we were closing our short positions, because if the Nifty was unlikely to go down, why keep them? So 230, 240, even now for people who have these positions, I'm talking of intraday or just a couple swing trades, you close these positions. Tomorrow we start again with a bearish bias. If the markets open up, gap up, it's very unlikely that we will take the trade on the long side. We'll wait patiently for the opportunities on the short side to open up.
Ambareesh, any of these stocks you'll buy in the telecom space? Bharti, Idea, Relcom, I mean, generally have been doing well, these stocks, but of course today the whole market is under a bit of a problem. Any of these stocks that you'll touch?
Not really. In fact, we are not recommending our clients to buy anything at all at this point of time. Like I've been saying over and over again, that it's surely time to conserve cash. And along with conserving cash, we are asking people to conserve their emotional energies also, because that's the most difficult thing right now. I mean, not to really panic and maintain your mental balance. So I think, these are two important things which the clients should remember right now, the investors should remember right now, and just hold back and sit tight.
Okay, conserve your emotional energy. That's the first I've heard in a long time. But Sudarshan, just a quick check on a couple of these metal names. Today you're seeing a bit of a bounce back on Tata Steel. Hindalco is up in the green as well. Any kind of trading on this, or is this just a dead cat bounce?
No, it may not be, because Tata Steel had all the opportunity to fall again, because the rally that we saw could have been, but it's not done that. It's held on to its levels after a 2-day decline. That was normal. So, and Hindalco also has a pattern that says that it has gone into a contraction rather than a decline, a renewed decline. So while today is too early, tomorrow both the two stocks are something that I was also watching in the afternoon. We'll be willing to have an open mind on both these stocks tomorrow. Today is too early to take a position on the long side anywhere.
Let's bring the 10-year yield out again. It's not stopping anywhere at 902, 903. It's now at 908 actually. So that's quite a bit of damage that you have seen in the money market. And as Lata was also pointing out, the volumes are also so thin right now that even marginal bit of selling is leading to quite a bit of pressure across asset classes. But the stock that's now flaring up is JP Power. Let's pull that out. It's a derivative stock, so no circuit over there, but big run on that particular stock. Mr. Tulsian, anything that you picked up, or is this just speculative activity?
Anuj, purely short covering, because that is what I have been saying, that if you really see the stocks like JP Associates, JP Power, in fact that's the reason half an hour back I gave a buy call on JP Associates also purely from the technical point of view. You can't take any fundamental view, because the things were so much short, the stock has corrected, became a penny stock, and probably the moment you see starts, because when you have such a huge short covering, it also comes in a very big way, because those who have shorted it, and the moment it starts moving up by 8-10%, now it is up by about 26-27%. So this is purely a technical call. I'm not saying that one can take a look and start taking an investment call on the stock. Probably it may fizzle out maybe after a couple of days or so, because the range, see, 10 to 15 rupees, that gives you ample money to make ample opportunity to make money. So purely technical call we are seeing, I think, from the short covering.
Okay, we still have about 5 more minutes to go before we close for trade, so let's get some final calls in. Sudarshan, although the trend is on the downside for this market, are you watching out for any markers on the downside at all? Any indication on how expiry session may pan out this time around?
No, Sonia, I never do this expiry business. I never can understand it. What's easier to say is that I'm not looking to go long. you know, this market is not giving us allowing us to make money on the long side. So we first want the markets to stop falling, to start building a base, and then only the outlook will change. So the markers are very clear. As of now, we are looking for opportunities to be on the short side.
So Darshan, can this market be played via September puts? I mean, is that something that traders can look at?
Yeah, we've been asking traders to buy September puts when it was 5,900, then 5,700, at 5,500 again. We suggested that go and buy September puts. Even now, ideally you want to buy, these puts should be bought on rallies. You get them cheaper, that's all. The rallies will also come, and then you need to have the conviction to go and say, okay, in this rally I am buying puts.
Okay, fair enough. Just about 4 more minutes of trade to go. So let's wind down the day's trading action for you. It has been another disappointing session of trades for the markets. So 5,400 is held. We did see a bit of a pullback from the lows of about 5,360 or so. But nevertheless, it's been a disappointing day. So almost 100 points gone again on the Nifty and almost 300 points gone on the Sensex. To add to the pressure was, of course, the rupee and the way it panned out. So 62.78 was the lowest point of trade that we hit. And right now, although the rupee hasn't seen too much of a stability, it's just bounced back a tad bit from those lows of 62.80 or so. The global markets have also been under some amount of cloud today. Not too much, but the CAC is down about 0.6, the DAC is down about 0.2%. So there's some nervousness over there. In fact, the Dow futures, the last time I checked, was flat, but you never know. They've had a couple of weak sessions as well. So let's see, maybe some pressure creeps in there. In our own markets, like Anuj and Lata were pointing out earlier in the day, the bond yields have risen to quite a bit, and this may result in huge MTM losses for many of these banks. In fact, a figure of around 40,000 crores for the entire banking industry is being talked about. So you saw a lot of banking names like Axis, IndusInd, Bank of Baroda, ICICI Bank, PNB. In fact, no bank was spared in trade today, and the Bank Nifty went home lower as well. Apart from that, you had names like Ambuja Cement, IDFC, Bharti Airtel. A couple of these defensive names have started to crack, names like Sun Pharma, Cipla, etc. So just watch out for that space. For now, IT has held up, but it's still precariously poised. So HCL Tech still in the green for the day, Infosys in the green as well. TCS actually dipped into the red today. So let's see how the trend pans out for some of these defensive names. And metal saw a bit of a bounce back today. So all in all, Anuj, 5407 on the Nifty. So we sort of respected that 5400 level. That's the best we can say, in falling markets like this. Even a little bit of a relief is enough for us.
Yeah, indeed, and maybe today's FI number will also be the key to watch out for, because on Friday we were discussing that it looked like big selling, but as the anecdotal evidence would tell us, that was not the case. So maybe today is slightly worse. You never know, till the time the data comes out. But let me just do a quick recap of the broader market, and that is closing with bigger losses. Actually, if you see the Nifty Junior and the mid-cap index, both of them actually will close with much bigger losses than the frontline index. In terms of big losers, Yes Bank stands out really. In terms of influential mid-caps, that stock was down 7% in trade and is now down 50% for the year. So it's halved from the level it started the year at, 7% lower on that. Some other influential mid-caps include LIC Housing Finance, 2 or 3 downgrades in the morning on LIC Housing Finance, that's down about 5%. Syntex is down 5%, easily been the biggest wealth destroyer this year, 70% lower for Syntex this year among the F&O stocks. Then mid-cap PSU banks had a bad day. Union Bank was down 4%, Dena Bank was down about 3.5%, and a couple of other ones were also down. Future retail was down 9%, as Pragya was talking about. In terms of gainers, it was JP Power which really stole the show, 22% higher on that one. So that of course had a short covering bounce. Adani Power was up 6%, and Hindustan Construction was up 4%. Hindustan Construction looks like, at least for the medium term, has turned a bit of a corner ever since its numbers. It's back to being a double-digit stock after being a penny stock for long. So 10 rupees on Hindustan Construction is what we have.
Okay, so that's the way the day has shaped up. Another day in the red for the markets. Just 20 more seconds to go. So let's just spot a couple of more internals. We were talking about some of the gainers. Some of these high beta names, JP Associates, JP Power. On JP Power itself, there's some news that perhaps they will hive off some of their assets to a pair of debt, and that's the reason why JP Power has spiked up a whole lot. But anyway, the base is really low. It's just a 13 rupee stock, so any rise looks quite amplified over there. But that's where we close for trade. 54.03 on the Nifty, another 100 points gone, and another very, very disappointing session. No relief at all, despite the huge slide that we saw on Friday. But Sudarshan, they just wanted to get, the trading range for this market. Has it conclusively moved lower now? Because we were speaking with CLSA earlier in the morning, where Lawrence Blanco mentioned that 4,700 on the downside is also not, could be a possibility very soon, and that's how low the trading range has moved for the Nifty.
I would think so. I would agree, because 4,900 is a target, and the targets can often be overshot or in this case undershot. So yes, 4,700 is possible. At this point, what's happening, Sonia, is that we are having a trend. So once the trend stops, which means once the prices stop falling, then we'll be able to define a trading range. As of now, all we can say is, and you are right, that the range has shifted on the downside. That's certain.
All right, Mr. Tulsian, just a word on Reliance Communication. Has it entered buy zone again?
Looks like, because that's what I have been playing on, that yes, I expect the market to stabilize from tomorrow. We will be seeing the short covering or maybe the renewed buying interest coming in some of the favorite stocks, and RCOM definitely falls in that category. So at least, I don't see any reason for the stocks to really short. In fact, if you really see the other two telecom stocks, Idea and Bharti, probably they are witnessing the profit booking. Bharti because of the hit, because of the increase in the interest rate on the external loan as well as the Indian loan. But for RCOM, I think that can be an exception. You can take a deviation from the sector pessimism or sector cautious view and can look to go long on RCOM.
Okay, one final word from your end, Ambareesh. What is the one thing that the government or the Reserve Bank can do which will allay the market's concerns now? I mean, some people in the market are saying that before Raghuram Rajan takes over formally on the 5th of September, if he comes out and, sort of says that we will have coordinated action between the Reserve Bank and the government, come out with some formidable steps, then maybe we might see recovery. What are you hoping to hear?
I don't think anything the government announces will really have an effect on the markets. We have seen that in the past few weeks, that whenever any announcements come, it has like opposite effect on the markets. So I think the only thing the market will wait now for is for the new governor to come in, and that will be in the first week of September. And in case we see some pro-growth policies with possibly interest rate coming down, I think that's a very far cry, and that's a dream right now. But in case we see an effort towards that, I think that could be one of the things which could actually change the tide for the markets.
Okay guys, thanks for joining us, Ambareesh, Mr. Tulsian as well as Sudarshan. Thanks for joining me and Anuj on the show. We'll have to wind down. The market sentiment has been bruised severely in the last 2 days. So here are some opinion on the market. Here's Nirmal Jain of IF.